Welcome back. Abu Dhabi Commercial Bank revealed a net profit increase of 17% at 1,820 million dirhams for the first half of the year, compared to H1 last year. So before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the Dubai Land Department has announced that funds invested into the Emirates real estate market in the first half of the year has reached 53 billion dirhams, with Emiratis ranking highest among Gulf investors with 12 billion dirhams in spending. Statistics from the Land Department's semi-annual report show that Arab investors contributed approximately 5 billion dirhams, a 111% increase in spending. Other Gulf nationals, including those from the UAE, over 16 billion dirhams, a 57% increase in spending, and foreign investors with over 32 billion dirhams, a 73% rise. The report revealed that UAE citizens ranked first among the Gulf investors, with a total number of 2,765 investors making transactions worth 12 billion dirhams. Citizens of Saudi Arabia ranked second with 605 investors and 2 billion dirhams in investments, while Kuwait came in third place with 141 and investments exceeding 360 million dirhams. The findings also indicate a growing number of Arab investors, with Jordan taking first place with 598 investors spending 1 billion dirhams. Lebanon in second place with 437 investors and 884 million dirhams, and Egypt ranking third with 388 investing 753 million dirhams. India came in first place among foreign non-Arab investors with 499 and transactions made worth over 8 billion dirhams. Pakistani investors came in second place with 3,285, spending over 3 billion dirhams, followed by British investors with 2,389 and over 4 billion dirhams in spending. DP World Limited handled 26.6 million 20-foot equivalent units across its global portfolio in the first half of 2013, with their global portfolio handling more containers in the second quarter. According to a company statement, there were lower volumes in the Asia-Pacific and Indian subcontinent region, while for the Europe, Middle East and Africa region, their UAE operations handled 6.5 million TEU in the first half of the year. This was mitigated by a stronger performance in the Americas and Australia, which increased 2.7% on a like-for-like basis. DP World Chairman, His Excellency Sultan Ahmed bin Sulayem, was quoted as saying that the first half of the year saw important progress in the delivery of 3 major projects for 2013. In June, they welcomed an additional 1 million TEU capacity at their flagship Jebel Ali terminal, and this increased capacity is alleviating current constraints and will support future growth in the region. He added that in the second half of the year, they will deliver developments in Santos, Brazil, and London Gateway, UK. The UAE's growth prospects are positive, according to the International Monetary Fund, with GDP growth set to hit 3.6% this year. The IMF added that in the non-oil economy, expansion would accelerate to 4.3% from 3.8% last year. The Washington-based agency warned Dubai, however, that the Emirates may need to intervene in its property market to prevent a bubble forming as property price increases continue. It has proposed targeted rises in property-related fees in Dubai, beyond the current level of 2%, to help curb speculation in the market and generate revenue for the government. It added that new regulations are also needed to prop up lending in the country, stating that a swift implementation of the planned new prudential regulations for mortgage lending and loan concentration will be important. you.